Okay, so in this seventh session for ACCA P5 September 2017 attempt, we are moving ahead to our syllabus part A4E that tells us to know about if we change the structure, culture, and strategy of our organization, then how it will impact on the way we measure the performance uh, as compared to currently, as compared to the current situation. Now, what happens is that in the question of ACCP 5, the examiner will tell you that we have a company XYZ that is currently either working at one place, having a functional structure. Now, they are willing to expand and they want uh, divisionalization. Now, if they want a divisional structure, so this change will definitely demand a new way to measure the performance of each and every division, as well as the managers of each and every division. So, what we need to do in the exam hall is to see what things are changing. Now, if our structure changes, then definitely it will have a greater impact on the way we were previously measuring our performance. Definitely, previously we were measuring the functional efficiencies of our departments. However, now we will be measuring the overall profitability, efficiency, effectiveness, and the goal congruence concept of divisionalization. Similarly, if we expand into another country or another region, then maybe the culture also changes. This can also be true if I acquire another company in another country. Now, if I am growing by acquisition, I hope this term is familiar to you from P3, growing through acquisition or growing organically. Now, if I grow through acquisition, acquiring other companies, then definitely there will be a lot of input of other cultures. Now, those cultures, those different cultures will demand a lot of different ways of measuring the performance of my employees. Because if I'm measuring, let's say, if I'm measuring the performance through ROCE of my employees currently, maybe this method suits uh, the current set of my employees. However, through acquisition, the company which I have acquired may give me a lot of those employees that focus on quality. Now, in their culture, they don't worry about how much money they are earning or how much cost they are incurring. They worry only about quality, assumingly they are from Japan. Japanese are known for quality. So, if I'm acquiring a company in Japan, they will try to get measured on this thing. And if I still continue to measure them on this thing, then again the idea of what gets measured gets done. They will feel demotivated. They may not focus on the word quality. And these all ideas will merge in syllabus part D again. We already know the impact of the change in our strategy. The way our strategy is, the same way we will design our performance measurement system. If I'm changing my strategy, maybe from a cost leadership to a product differentiator. These are the Porter's generic strategies being adopted from your P3 studies. So if I am currently a cost leadership, if I'm currently following a cost leadership, And moving on to a product differentiator that demands me to focus on quality as well as innovation, then definitely the way I am measuring my performance right now will be focused on costs, the budgets, the variances sort of thing. Now I will have to implement some sort of quality management techniques, quality measurement techniques, which I will learn in syllabus part D. So all you need to focus on is that if there is a change, then we need to change the way we are measuring things. And if we don't, then there comes your question, because in the questions they don't. And because they don't, there will be some issues. You have to highlight these issues and you have to reason them that because they have not changed this thing, because they have not changed their performance measurement techniques, this is why this issue is coming, and here comes the solution. So this is the concept you have to keep in mind, and definitely whatever you do, you have to keep this thing in your mind: suitable, feasible, and acceptable. The structure, the culture, the strategy, your performance measurement techniques should all be suitable, feasible, and acceptable. Further, your syllabus wants you to focus on why it is necessary to keep on improving management accounting and information systems in a competitive and global market. Now, when you are facing competition, we have already learned the idea of Porter's five forces as well, which covers the competitive rivalry as well. Now, if we are forced by our competitors, then that force will demand us to do more and do correctly. Now, this thing is again a change, and this is why I will try to reshape my management accounting systems and the way I receive information and pass it to my senior management. This thing will be covered in your syllabus part C, and this thing is most probably covered in syllabus part D, A, and B as well. You have to learn that if the company is facing competition, and definitely they will be the competitors will be adopting some sort of strategies. Now, in order to cope up with those strategies, you need to come up with some new strategies. So you will generate some new strategies, new changes, which will already be done by the examiner. However, those changes should equally be monitored and managed in some new way, because these things are new now. If you're not doing this, then you may fail to cope up with your competitors and you may lose competitive advantage. Same goes with the global market. In a global context, in an international context, if you are expanding, if you are growing and you are generating new businesses internationally, then what you may face is a lot of new maybe new laws, new modes of payments, maybe new ways of making things. It can be anything. So whatever comes as new, you need to generate sort of an information system that gives you an information regarding this new thing as well, on timely basis, in a most efficient manner. Similarly, you also need to have a management accounting system that records the costs, efficiencies, effectiveness of these new things. Connected with this idea, you can also think about the this word. If you see improving, you can also focus on the term BPR, although it is linked with the ideas of processes, but the way you do generate your information is also a process. Okay, and maybe the examiner combines this idea with the idea of business process reengineering. The way you generate the information, the examiner might give you a change in it, and you may need to appraise that change. Maybe that change is good or bad. You need to comment accordingly. How does contingent factors influence the organization's management accounting? Now, contingent factors are those that are dependent on some other factors. If that thing happens, then this thing will happen. This contingent factor will happen. If the prices go high, or if the law changes, then I will have to do this thing. It can be anything. Now, if we are in an ambiguous situation, okay, a sort of this situation where we have contingencies, where we are not sure about what is going to happen in the future regarding a particular process or a situation, then this thing does have a lot of impact on management accounting, because first of all, it is very difficult to design a system that records and reports on these ambiguous factors. However, much of your syllabus part D will cover things like predicting, and forecasting. So how we tackle this thing is we do a lot of predictions, estimations, forecasting, and the word sort of, if you remember, probabilities, the idea of expected values. This is all connected with this thing. So in a management accounting system, you will have to do a lot of these things in order to cope up with these ambiguous factors, so that you can record to a certain reliability, although these will never give you 100% accurate results because they are all estimations, but still to a certain extent you will be able to predict what is going to happen in the future, and you will be able to take decisions accordingly. So you need to remember that if the organization is facing some contingent factors, it will influence to a greater extent their management accounting systems, and if they are not changing their management accounting systems, then these contingent factors may result in business failure, because if you're not working on these things, these can be fatal as well. They can cause you a big loss. Now here comes the theory because of which one of your models were removed from the syllabus. The model was Prism. The examiner thought that it is now not that much useful to work on that model, because we already have a stakeholder theory which covers a lot of aspects of stakeholders. Now, I always talk about this model: suitability, feasibility, and acceptability in P5. Whatever you suggest and whatever the company is doing should be acceptable to these people. So in order to understand their acceptability, we need to understand how Our stakeholders will affect our strategy formulation, strategy implementation, and the overall business performance. Now, stakeholders do have a lot of classifications. I have jotted them down in a small picture over here. My stakeholders can be internal, connected, external. Internal employees, management, connected can be owners, investors, suppliers, customers, loan providers, banks. External, government, local communities, pressure groups, unions, things like that. Now you need to keep this picture in mind because once I guess I remember the examiner asked about the categories of the stakeholders which this company has. So do keep this list in mind, this classification of internal, connected, and external stakeholders. Now, your stakeholders will definitely demand something, and according to their power, I will see whether I need to provide them this thing or not. If they have a lot of power, a lot of say in my organization, then whatever they want, remember this thing, whatever they want will become my critical success factor. And by looking at that critical success factor, I will be required to generate some key performance indicators. So this is the idea most of the students miss out in P5, because till P3 this was not the case. Now in P5 you may be required to see how much power and interest levels using this stakeholder mapping model, which we have been using since F1. You will be required to assess the level of interest your stakeholders have and the level of power which your stakeholders have, and then if they are having a lot of power and a lot of interest in your company, if you grade them in this category here and here, then definitely whatever they say you, in fact not this thing, if they are in your category D, which we call as key players, because they have a lot of power, a lot of interest, and a lot of power. So whatever I do, my strategy should be acceptable to them, otherwise they will not allow me to run the company. They have that much power. These can be your shareholders, these can be your maybe key employees as well in a science lab or a scientific sort of a business. They can be anyone. However, if they are key players, then anything that I do should be acceptable to them. So this means that whatever they say should be done in my company, and whatever they say will become my critical success factor, because if I don't do that, they will not allow my company to run. You may also have other categories of interest and power. Maybe you come across some people with high level of interest in your company, but they are very much scattered, so they don't have individual power. Their powers are low. Now what you need to do with these people is you need to keep them informed. Little direct influence, but may influence more powerful stakeholders. Now what happens is, usually these are your individual shareholders, usually, or maybe employees, because individually they don't have that much of power. However, if they become unionized, if they become hurt, they may go for media things and things like that. They may cause bad publicity, and then collectively they may fall into this category. So you need to keep them informed, you need to keep them satisfied, you need to keep them aware about the things, And for P5, you need to see what they are saying and at least try to do a little bit of effort to do those things which they are saying. There can be people with category C where they have a lot of high power but very little interest in your company. Now, these are usually uh, governments, pressure groups, things like that, unions. They have a lot of power, but they may not exercise a lot of interest, direct interest in your company. However, one of the greatest examples I have seen for these peoples is one lecturer I remember, Paul Marison, I guess, for ACCA AP1 LSPF he teaches. Uh, he told these people as dogs. Now, dogs do have high power, although they are not interested in you unless and until you don't hurt them. And if they are not satisfied with you, then they may exercise this power which they have and may bite you. So which means that they may fall into this category as well if you don't keep them satisfied. So equally, I will again have to see what they say, and I have to keep them satisfied by measuring my performance in those areas which they want to see in my company, and improving my performance in those areas using CSFs and KPIs. Now then comes the last category of your A, which says low power, low interest. Now for them I will do minimum effort because I know they cannot hurt me that much. But remember, usually we do have some customers here, and when we are talking about performance management, nowadays a single customer can also cause a lot of damage through Facebook. So this minimum effort doesn't mean no effort, okay? It doesn't mean that you will not do anything. You have to still work on their interest as well, because again, at the end of the day, they can become powerful. Now what happens in P5 is you have to do a lot of CSFs and KPIs using this stakeholder theory. However, categorizing your stakeholders into these categories becomes a lot of difficult when it comes to exam, because the examiner gives you such information where you will not be able to decide that how much power they have and how much interest they have. So it will be hard for you to decide on that to which category of Mendelow's matrix they belong to. So what you need to do in the exam hall is to use your judgment and justify your categorization with reasons that why you think someone is having high level of interest and high level of power. As far as you justify, your answer will be correct. And most of the time I'm seeing that the examiner is giving you questions related with stakeholders. So although they are not clearly asking you in the requirements for this word, but this thing is implied in most of the scenarios. These people will be there in a 50-mark question, and they can also be in a 25-mark question for 5 marks or 6 marks or 15 marks, whatever the examiner feels comfortable with. So it's an easy theory to remember, although it's difficult to apply when it comes to questions in P5, and we will see its questions and practice it accordingly. How social and ethical matters impact strategy and performance. Now, the company which you're running will be definitely working in a society where there will be some sort of social issues, maybe social norms or customs. Similarly, most of the big organizations and today's modern organizations do have some sort of ethical stances. Now, if you have high level of customs, high level of norms like religious norms or society norms, cultural norms, if your employees take them very much seriously, then whatever strategy you make should uh, reflect these norms as well. Same goes with ethics. If you have some ethical stances, then your ethics should be reflected in your strategy. If you are making a strategy of cost leadership, assumingly, now focusing on costs may make you forget about these society norms. Maybe your employees wanted some health benefits, some educational benefits. Because you're following a cost leadership, you will try to kill all these, and which may have a negative impact on your performance. Same goes with ethics. Now, ethics is a bigger term. Now, if you are taking care, let's suppose, about environment. Now, taking care about the external environment, the pollution and the CO2 rates will cost you. And if it costs you and you're following a cost leadership strategy, then definitely there will be a conflict. So, whatever your social norms are and whatever your ethical stances are, you must incorporate them in your strategy. And if they are part of your strategy, then it is compulsory that you should generate some sort of critical success factors and KPIs out of them so that you can keep monitoring and managing them. And if you don't, then these things, these tiny things, may become a lot serious. Kindly give me a moment. Moving on, one of the last topics of your syllabus part A is about the idea of environmental management accounting. Now, your syllabus wants you to know what do we actually mean by environmental management accounting. Secondly, we should also be able to evaluate the way an organization is doing their environmental management accounting. Third, we may also be required to apply environmental management accounting using life cycle costing and the activity based costing. Now, this is not that much difficult. However, usually I suggest my students after teaching ABC that try, if possible, if you have this question in an optional one, then try to leave this one because it consumes a lot of time, and you will see how when it comes to questions. Now, what is environmental management accounting? to ensure that environmental costs are fully considered and improve the environmental performance of an organization, a new technique called environmental management accounting has been introduced, and what we do in it is we identify and estimate the costs of environmental related activities, and we seek to control these costs and manage these costs accordingly. Now, if I am running a factory, let's say a cement manufacturing factory, now what happens is that there will be two basic types of environmental related costs. One is the controlling costs, and the other one will be if I don't control. So whatever steps I am taking to control those pollutions and the environmental impacts will be my environmentally uh, footprint reducing costs, and if I don't, then maybe I face some legal issues, some sort of other penalties, maybe some bad publicity and things like that. So these can also be my costs as well. So you need to focus on both costs accordingly. And in an environmental management accounting, it doesn't mean that we will not be doing anything that was done previously. We will do, but we will plus this environment word in it. So whatever we were measuring and managing previously, we will just add on some things related with environment as well into them. So whatever CSFs I had and KPIs I had previously, I will now add up some sort of environmental related critical success factors and KPIs as well, so that I can monitor and control these costs. Environmental management accounting identifies and separately monitors the usage and costs of resources such as water, electricity, fuel, and enables these costs to be reduced. It ensures environmental considerations form a part of capital investment decisions. I hope you remember the idea of NPV, net present value. And when we used to calculate it in F9 or P4, if you have gone through it, we thought about a lot of cash flows that were coming in and going out, and then estimating the project's net present value accordingly. Now, in these cash flows, we usually were not focusing on the idea of environmental related cash flows, cash outflows or inflows. So environmental management accounting will ensure that when you are doing some sort of project appraisals, the capital investment decisions, you will also accommodate the environmental related cash flows also, so that when you are appraising a project, you appraise it accordingly according to its environmental footprint as well. Environmental management accounting will also assess the likelihood and impact of environmental risks. Now, you are making a new thing. Environmental management accounting will force you to do some sort of risk analysis. Maybe this new thing is a new hydrogen plant or things like that. So if it is like this thing which can have a high profile impact on the society, then environmental management accounting will give you those tools to analyze the risk which this project may have and take steps accordingly. Environmental management accounting will include environmental related indicators as part of routine performance monitoring, which I have already discussed, the idea of KPIs. Environmental management accounting will make you benchmark or compare your activities against the environmental best practices which others are following. So this is the idea of environmental management accounting, what we actually do in it. Now this is not that much hard to think about. However, this management accounting will be done through some techniques, and those techniques are too many in the real world. However, the syllabus has given you only two: the idea of activity based costing and the life cycle costing. Now, activity based costing is not that much difficult to understand. However, when it comes to questions, the data provided to you to calculate and comment on the impacts of activity based costing is too much high. The difficulty level is too much high. Now what we actually do in a activity based costing is, it is better understood by the example which I usually share. This example has been adopted from your Kaplan study text. Now this is a traditional sort of a data given to you in an activity based costing, and what my real theme will be is to focus on activities that are costing me, and when I'm reading them in an environmental context, then definitely I need only those activities that are environmental related. However, remember that this activity based costing is not only used for environmental management accounting, it is generally used as well, so you may also get a general question on it. However, the purpose and the way we work on it will be totally same. Now, if you are manufacturing some products X, Y, and Z, there will be some labor, there will be some machinery involved on hours, there will be some materials, and there will be some volumes that you estimate to make. Now you need to come across a total cost per unit, and I hope we remember that the total cost of a product is all costs plus the overheads, the direct costs and the indirect costs. So what happens is that I will first of all calculate the direct costs. The examiner has given you in this question the direct costs, and they have calculated them in this way: the materials for each product X, Y, and Z, 20, 12, 25, simply by taking these figures out, 20, 12, and 25. Labor will be 3, 9, and $6 per unit, just by multiplying these with the per unit data which they have given you. They have also given you the labor cost per hour. If I multiply this 6 with this 1.2, 1.5, then this will give me 3 for X, 9 for Y, and $6 per unit for Z. Now these are my total direct costs. Production overheads are at the rate 828 per hour. Now this is the way we used to do in absorption costing, traditional costing as you say. We used to absorb all the overheads on one single basis, and here they are assuming that the bases are machine hours. In the exam, in another question, it can be labor hours, it can be units manufactured, Okay, in an absorption costing system, we only generate one reason, that these are the reasons why I generate my overhead costs. Now, because they are generating one reason, machine hours, what they are doing is they are absorbing a production overhead at 28 per hour now, and a total of 23,375 machine hours were worked, and they are giving you this rate which is known as the OAR, overhead absorption rate, as well. Now what you are simply doing is you are multiplying them with the machine hours. 28 into 1.15, 1 and 3 will give you these things, and then you will reach your total cost per unit. Now as far as absorption costing is concerned, this is not that much difficult. However, we know that in a modern business, there can be a lot of various causes of overheads rather than a single machine hour or labor hour. There can be a lot of activities that may be costing those overheads. Now if that is the case, then I will have to switch to ABC costing, and for that the examiner is giving me some data. Further analysis shows that the total production overhead of 6,54,500. Now they have calculated it. If you just multiply this 28 with 23,375 hours, then you will come across this 6,54,500. So they are telling you that this total overhead of 654,500 is not entirely driven by machine hours and can be divided as follows according to these activities. Now these activities can change according to the company, and they may involve some sort of environmental activities as well. Right now they have setups, machinery running costs, material handling costs, costs related with inspections. Now these are the activities which they believe are causing this total overhead rather than that machine hour alone. Now what they are doing is, if that is the case, that these are the activities, then I must know how much I am doing these activities on each of my product. So this is the data they have given you. For product X, for product Y, and for product Z, I am doing these number of setups. Here are the number of movements of materials. Here are the number of inspections of materials per product. Now they are willing you to calculate, they are expecting you to calculate the cost per unit using ABC principles. Now here is the method which you need to remember for ABC. The first step is, usually this is done by the examiner, but if not, then you will be required to do whatever distribution of activities they have given you for this overhead. Make sure that you distribute those overheads according to the percentages. Then you will be required to group production overheads into activities. Now this is a sort of matching exercise which we used to do in F2 and F5. If you have an activity you need to identify it accordingly. You were having setups, you were having machining or machine running costs, you were having materials handling, you were having inspection. Then comes step 2 to identify what drives the costs, what makes uh, the cost to incur in these activities. Now for this question, it is simple but it can be difficult. You need to match up. If there are some costs related to setups, then what will be that driving factor? What will be that factor that drives this 35% cost? Will it be the inspections? No. Will it be the movement of materials? No. It will be the number of times I run the setups. Okay. So this will be my driver. For materials handling, it will be the movement. For inspection, it will be the number of inspections. And for machinery, it will be the machine hours. So this is the step number 2 which you need to do. Number of setups, number of machine hours, number of movement materials, number of inspections. Now once you have done this thing, then you need to calculate an overhead absorption rate for each activity. You were having setups at this cost 229,075. You adopted it from here. You chose a cost driver known as number of setups. Okay, so there are total number of 670 setups. If you see in the question, here they are, total number of 670 setups. So my cost of activity per driver will be, activity cost per driver will be 341.90 per setup, 5.60 per machine hour, 818.13 per movement of materials, 196.35 per inspection. Now the only thing that I will be required now is to absorb in this step 4 these activity costs into products. Now my product X, this working, remember this is only for the overhead working. Your direct costs will remain the same, whatever they were previously in the absorption costing system. Now for setups, you will see that in the question you have 75 setups. So what I will do is I will pick this up, 75 into my 341.90. This will give me 25.642.50, and these all are going accordingly for all the products, product X, product Z. I will total them up and divide them by total number of units which I am going to manufacture. This will give me the cost per unit, production overhead per unit. I will move on, add them up in my direct costs. Here, this plus this will give me this ABC cost per unit. Full absorption cost under ABC and full absorption costing, full production cost under absorption costing. These are the two outcomes that you need to generate in a simple exam question. Usually this is for 7 marks or maybe 9 marks, not more than that. However, the real thing begins after this thing. Till this point, the examiner may ask you about maybe how much these environmental management, environmental related activities will cost. Okay, so you may have used this technique and you can tell them that this is the cost, or these are, in fact, sorry, these are the costs, production overhead costs per unit, which we will generate additionally if we focus on our environmental related costs. But much of the discussion till now in ACCA P5 is about this idea. If a company is currently using absorption costing, is it suitable, feasible, and acceptable? Now if you are using absorption costing, then you should have simple processes, small company, uh, a cost leadership strategy and a low budget where you cannot afford a lot of new things. If you are very small, simple, you are focusing on cost and you have a low budget, then absorption costing will suit you because it doesn't cost you much. However, if you are a large company, then you will have a lot of activities and you cannot simply rely on this absorption costing because this focuses only on one reason of your overheads, whereas if you deeply analyze your processes, there will be a lot of activities that will be costing you and that will be causing your overheads. And if this is the case, then I will have to switch to ABC. And if I switch, then there will definitely be a change in my cost per units, which you can see over here. And this change will change the way I am pricing my products, the way my customers react, my profitability, and also my decision making will also be impacted, because now I know that which product is costing me more and which product is costing me less. So these are the four impacts which the examiner usually asks after the calculation of activity based costing. These are the advantages, you can say, also, because now after looking at these more accurate costs per unit in the ABC, I can price my products accordingly. If you see, if I was pricing my product, if this is the cost of product X in ABC and this is the cost in absorption costing, then you can see the difference. I may be pricing this product at 90, which is still too much low. And previously in absorption costing, I may be facing a lot of losses and I may not be generating that much profitability. So in absorption costing, I will be able to price my product X more accurately than previously. Same goes with those products which I was previously overpricing. You see, if I had product Z, if I see this case here, if I was using absorption costing, I was actually thinking that it costs me 115. I may be pricing it at 120, but my customers will not be buying it because another competitor might be providing it at 90 because he was using ABC costing. He knew the actual costs and he priced it at maybe 110. So this is the bigger impact, the pricing impact. Secondly, this change in pricing will bring some change in the behaviors of your customers, some increase in demand, some decrease in demand. Also, in activity based costing, you will come across those activities that are value adding or that are non value adding. Both can be possible situations. If you come across those activities that are non value adding to the customer, then you may kill them. You should ignore them, you should cut them, and in this way this activity based costing analysis will give you some benefits of saving time, saving costs on those non value adding activities. And if you come across those value adding activities, then there will be a chance, because now you are measuring the performance of those value adding activities such as setups, machining, material handling, inspection. Because you are measuring those value adding activities, now what gets measured gets done. Now you will be more likely and more able to enhance and innovate those value adding activities, thus generating a lot of value for your customer. Activity based costing will give you a little bit more than all this, but this is the basic idea which you should carry with yourself and practice this question again by yourself when you revise these lectures, and try to calculate all these numbers yourself by just looking at the question. Make sure that you reach these costs per unit by yourself, because sometimes it becomes messy. Make sure that you understand the whole process, and you should be able to reach this cost per unit. This is the basic. Then comes the behavioral aspects, then comes the other impacts, which we will be covering from time to time in the questions. Finally, there is a life cycle costing approach to environmental management accounting, and the life cycle approach is a little bit like this. From the introduction, I hope you remember the product life cycle, and from the growth, maturity, and decline. Now the idea is that the idea of life cycle costing is generally that here, when you are standing here before the introduction, you should estimate the costs of all these stages here. The costs here can be 90, 80, 70, 40, whatever they are. Combine them and predict them here so that you can better predict, better make decisions for the future. Now these costs can be related to any activity. In the introduction phase, there can be marketing costs. In the growth phase, there can be marketing costs. Maybe there can be warranty costs as well. In the maturity phase, there can be a lot of again marketing costs, as well as some sort of new steps, some entry barrier costs. You will come across all these in the questions. And in the decline phase, there can be a lot of wind up costs. These are the general categories. There can be anything in these stages. So whatever you may have, you should predict it from day one, and you should quote the price of your product by considering all these stages of your life cycle from day one. Because what happens is, if you reach this maturity phase and you raise the price, then your customer will not buy your product. Your product should be static in the price. Usually customers like those products which are static in the price, and it can only be possible if you have predicted the whole life cycle of your product and quoted the price accordingly. Now in these life cycle stages, there can be some environmental costs as well, and the idea is to predict them and incorporate them in your product pricing. In the introductory phase, there can be less costs. However, usually you will come across the environmental related costs in the decline stage, where you have to wind up a big plant, and this word is usually used, decommissioning the plant, or cleanup costs, things like that. So this is the idea of life cycle costing. This is not a big area of your syllabus. However, it has been tested for 3 to 4 times, and it's usually easier. You just need to think about all those costs which may happen throughout the life cycle, and if you don't, then at a certain point of time your product may be outpriced, and the price may be outdated, which will cost you. Another connected idea with product life cycle is the idea of portfolio, which is a P3 idea. However, it is useful here. It will come across you again in syllabus part E as well, but it's good to know over here. This idea tells you that you should have a balanced portfolio of products at all stages. If one product is at decline stage, then there should be some products at the introductory stage, some at the growth, some at the maturity stage. Because if you don't balance out your products, then your all products may reach the decline stage and you will not have anything over here to keep you in the business, and you will be out of the business. So these are the ideas of syllabus part A. What I would recommend you is go through the whole syllabus part A, all the recordings, all the ideas, wind this topic up, syllabus part A. What I would do is, after syllabus part B, which is starting up and it's not that much big, syllabus part B is very little. After syllabus part B, we will move on to some questions to wind up this syllabus part A and B areas. So make sure that you revise all the topics of syllabus part A, and when we finish part B, you should also revise them as well. This is it for this session. We will again discuss new ideas in syllabus part B, which tells us the external influences on organizational performance. We will be dealing with all those things which are external to the organization and they impact us.